So here's a question for you. What if the most powerful currency in the world was slowly, quietly being replaced? It's not science fiction, it's a real trend happening right now called de-dollarization. And honestly, it's reshaping our entire financial world as we speak. All right, let's get into it.
Okay, check this out. Right now, 58% of all the money that central banks around the globe hold, it's in US dollars. Now, that's still a huge majority, no doubt. But get this, just 20 years ago, that number was over 70%. So yeah, the dollar is still the king, but you could say its kingdom is definitely shrinking.
So what do we even mean by de-dollarization? Well, it's actually pretty simple. It's just countries all over the world making a conscious effort to use the US dollar less. They're looking for other options for saving their money, for trading with each other, and for pricing things on the global market. It's basically a worldwide hunt for a financial plan B.
To really wrap our heads around this whole thing, we're going to break it down into 4 parts. First, we'll look at how the dollar got to be king in the first place. Then, we'll dig into why these challengers are popping up. After that, we'll see how they're actually building an alternative system. And to finish, we'll ask the big question: what could this new money map of the world even look like?
All right, first up, King Dollar's reign. I mean, how did one single currency end up dominating the entire global economy?
You know, the dollar's rise to the top didn't happen overnight. It started way back in the 1920s when it finally overtook the British pound. Then came the big one, 1944, the Bretton Woods Agreement. That deal officially made the dollar the world's main reserve currency, and it was tied directly to gold. And, even after President Nixon cut that link to gold in 1971, the dollar's role was so entrenched, it just stuck.
So why did it stick around for so long? Okay, here's a good way to think about it. The US dollar is like the world's universal travel adapter, right? If a country like Brazil wants to buy oil from Saudi Arabia, it's just way easier for both of them to use dollars. It just plugs into every economy. Why? Because the US economy is huge and stable, its financial markets are massive, and everyone sees it as a safe place to put their money in a crisis. It just works.
And that brings us perfectly to our second section, the rise of challengers. I mean, if the dollar system works so well, why does it feel like half the world is suddenly trying to find a different plug?
This quote here from Brazil's president, Lula da Silva, I think it just captures the feeling perfectly. There's this growing sense that the whole system is kind of lopsided, and leaders are starting to ask out loud, hey, why should one country's currency have so much say over our own economic future?
And look, this isn't just talk. This chart right here shows you the trend in black and white. It's a slow but undeniable move away from the dollar and how central banks are saving their money. A drop from 71% to 58% in about 20 years. In the super slow-moving world of global finance, that's a huge shift. You could almost call it a quiet revolution.
So what was the big trigger? Well, it's the idea that the dollar can be used as a weapon. When the US hits a country with financial sanctions, like when it froze Russia's central bank reserves after the invasion of Ukraine, that sends a massive shockwave across the globe. Other countries see that and they think, whoa, that could be us one day. It suddenly makes holding all your savings in dollars feel really, really risky, and it pushes them to diversify.
So that leads us right into part 3, building an alternative. Because, it's one thing to say you want to move away from the dollar. It's a whole other thing to actually build the plumbing for a brand new system from scratch. The BRICS nations, that's Brazil, Russia, India, China, and their partners, they're really the ones leading this charge, and they have a pretty clear 3-part strategy. First, start trading with each other using your own currencies. Second, build new payment systems so you don't have to use the Western-controlled ones. And third, buy up a lot of gold because it's a neutral asset that nobody controls.
Now, here's a really interesting way to picture these payment systems. Think of the dominant SWIFT network as the world's financial Windows operating system, right? It's everywhere, everyone knows how to use it, but it's ultimately controlled by one major group. Well, systems like China's SIPs are kind of like Linux. They're building a new open-source style alternative from the ground up, trying to create an entirely parallel world.
And here you can see that gold strategy in action. Just look at the insane amounts held by Russia and China. They have been quietly stockpiling gold for years. For them, it's the ultimate insurance policy. It's a real, physical store of value that exists completely outside the US dollar system. Which brings us to our final and maybe most important section. With all of this going on, what does the future of money actually look like? Are we really drawing a whole new map for global finance?
Okay, this is where things get a little tricky, a little more complex. Because while the dollar's share of savings, those reserves, is falling, its role in everyday global business is incredibly sticky. I mean, it's still used to price most of the world's trade, it's used to issue most international debt, and it is on one side of nearly 90% of all currency trades. Its dominance in the actual doing of business is still absolutely massive.
And that brings up a really big question. So here's our first knowledge gap for you to think about. What does it really mean if the world is saving less in dollars, but still using them for almost everything else? It's a total paradox, right? Our country is truly moving on, or are they just hedging their bets? So here's the mainstream view. This is from the head of the IMF. The argument, pretty much, is that there's just no other economy out there with the size, the stability, and the open markets to replace what America offers. From this perspective, there really is no other viable option to the dollar. Not yet, anyway.
But then, here's the counter-argument, this time from S&P's chief economist. The idea here is that the future isn't about one currency taking over from another. It's about the dollar going from being the single dominant currency to being just one of several important ones. A shift from a one superpower world to a multi-power financial world.
And this leads to our final and maybe most fascinating knowledge gap, technology. Remember that universal adopter advantage the dollar has? A lot of that is just about convenience. But what happens when new tech, like central bank digital currencies, or CBDCs, makes it just as easy and cheap to trade Indian rupees for Brazilian reals directly? Technology could literally erase the dollar's biggest advantage almost overnight. So I want to leave you with this final thought. Maybe the goal here isn't to replace the dollar with some new single currency. Maybe the world is actually moving towards a system where it just uses everything else. The euro, the yuan, the yen, gold, maybe even new digital currencies. The real question isn't what will replace the dollar, but what does a more fractured world with many powerful currencies actually look and feel like?